Happy New Year. I'm Larry J. Rybka, the CEO of the Valmark Financial Group. Right before year end, Warren Hirsch of the Life and Annuity Specialist newsletter emailed me and asked me to make some predictions about 2022 for the life and annuity market. I took a pause and wrote three of them out. Unfortunately, my email failed to get to him in time for publication, but I'd like to share some of those predictions with you. If I did have a crystal ball, I would want to know what's going to happen next to the US equity markets this year. I'd also like to know what will happen politically with the midterm elections in 2022 and the resulting tax policy. But for today, I'll just confine my predictions to a much narrower scope of our business. Here are my three predictions. Prediction number one, the complete collapse of the IUL premium finance market. Prediction number two, that a new fee-based variable product will completely disrupt the US life business. And prediction three, that within a year, there will be little or no cybersecurity coverage for most independent financial firms. Well, let's start with that first prediction, the collapse of the IUL premium finance market. The end of 2021 certainly gave us some clues as to what might be coming here. First, it starts with basic economics. As bond rates continue to fall and portfolio rates drop, the option budget for IUL products continues to drop, forcing caps lower and lower. Some companies renewed caps for January at 6%. This means complete devastation for IUL premium finance programs that rely on them, in spite of good equity markets. This is causing lapsations. We look at litigation. I count 6 major cases involving premium finance IUL, some involving hundreds of policyholders. And as these disappointed policyholders lapse their policies, it causes chargebacks and litigation. That litigation and lapsation is being responded to first by the reinsurers. Reinsurers are pulling back from the direct writers and saying they won't participate because of the economic risk of these lapsation. So we are seeing pressure from reinsurers that are forcing the direct writers to change behavior, much like we did with the last round of premium finance STOLI, where the reinsurers required skin in the game or that there be cash up front. We also see pressure as errors and omissions policies renew where there are large claims. I hear from our brokers that some carriers are just not renewing at all, or if they are, it's with outright exclusion for premium finance. The final pressure on this is from the NAIC. The NAIC will look for its third time at how to address abusive IUL contracts, especially with proprietary indexes, is their focus of a February meeting and comment letters. So carriers and distributors who put too many eggs into this basket will feel the pain as this market collapses in 2022. My second prediction for 2022 is the creation of new and innovative variable life products, both fee-based variable products and level commission products. There's a product that will be released in the first quarter of 2022 that Valmark has had access to, and I think it will be particularly disruptive for a number of reasons. One, it is easy to explain to the consumer. It has level charges for term insurance that are fixed and can't be changed by the carrier, and any premiums above this term level are paid into sub-accounts ranging from low-cost index accounts all the way up to managed sub-accounts. And RIAs and broker-dealer representatives will be able to collaborate with this product, with the majority of compensation being paid in the form of advisory fees that are withdrawn from the policy's cash value. I think this product will have application across a broad swath of clients, ranging from mass affluent clients looking to literally buy term and invest the difference in contracts, all the way up to private placement life. Early illustrations show that this product at reasonable fees would be very comparable to a PPVUL contract. My final prediction, that within a year, there will be little or no cybersecurity coverage for most independent insurance agents and financial advisors. Looking back in 2017, I really saw that cybersecurity coverage would be a key issue for financial advisors. We work with clients, very important and private information, and the bad guys are just putting more and more pressure to get at that information. If cybersecurity thieves can break in at the SEC and other large institutions, it's very difficult for smaller firms to protect that information. So at first, carriers saw this as a huge opportunity, with a number of carriers joining into this market in the last couple of years. But as large claims have come in, they have found that claims paid have exceeded drastically the premiums they were charging for this coverage. And particularly the ransomware claims that can be in the millions of dollars have just made this a completely unprofitable line for most major carriers. When we renewed our liability coverage and cybersecurity coverage for the coming year, we found only a single carrier willing to write this coverage, and that at 4 times our current price that we paid in 2021. It's also going to go from what was group coverage, where everybody could get it, to now coverage that will require individual underwriting. I think about some of my friends in the medical profession, where if they had a claim, let's say, for malpractice with medical situations, they were unable to renew coverage. I think the same thing is going to be true with cybersecurity coverage. So our focus really needs to be, yes, we'll get coverage, but best practices in making sure there are no claims going forward, or else it would mean going without coverage. As we think about coverage, particularly those of us in the life insurance business, we think about a claim that's covered forever, like life insurance or disability, where we write coverage today and if the claim occurs 10 years, 20 years, 30 years in the future, we can be certain of coverage. With liability coverage, all of these coverages are called claims made. That means that the coverage that is in force today, when the claim is made, is the coverage that is important. And these coverages renew annually, and the language changes annually. So we really need to think with everything we do, whether it's premium finance or cybersecurity coverage, the question shouldn't be, are you covered today, but will you have coverage when a claim occurs? If you'd like more on any of these items I've talked about, I would be glad to send them your way. If you'd like to look back at my 2017 predictions, I'd be glad to send those to you as well. You can request these items from Brandy Free at the email address below. And thanks for watching. I really wish everyone watching this a very prosperous New Year's. As we think about these 3 things and other things, we're building business plans around these trends to position our member firms to prosper in the years ahead. Plutarch, the Greek philosopher, said, "Fate leads him who follows and drags him who resists." So wishing you well and planning for your 2022. Thanks for watching today. At Valmark Financial, we bring the golden rule to life.